Today's markets are driven by constant headlines, interest rates, and inflation data, elections, global tension. While the stories change, investor emotions don't. The real risk right now is not volatility necessarily. It's reacting emotionally instead of sticking to a thoughtful plan. And Micah Tipton with Evans Financial Group is here to talk a little bit more about that. Micah, you've got 3 things for us to know about today.
Yeah.
Start with strategy.
Okay, you got to have a strategy. The market it's going to be up and down. We see it all the time on the TV. And if you don't have a plan for that, you're going to be in trouble. People are left making knee-jerk reactions to what they see in the headlines. And the biggest downfall of that is if you try to get out of the market before it's too late or time it to get back in, instead of just sticking with a long-term plan, that's where people really hurt their investments because they take all the losses and miss out on the recoveries.
Yeah.
So don't let the emotions lead the way. Have a plan you can stick to.
I'm one of those who goes by the emotion, which is not the thing. And that's why I have an expert on my team to say, no, just it's okay. Don't look at the headlines right now because I'm reading the ups and downs on the news every day. So I'm reacting to that. But what about a person's risk tolerance level? How much does that play a role?
Well, a lot of people think they know what their risk is, but when the market starts to decline, they get real uncomfortable, and that's probably a good indicator that you've got too much risk. But you have to pay attention to things like rebalancing, making sure that your investments are allocated to the right buckets. And the closer you get to retirement, you're not going to invest in your 60s like you did in your 30s. So you have to keep that updated. But the opposite is also true. You can have too little risk. If your money is sitting in a savings account earning 0.1%, then inflation is outpacing it and your purchasing power is just getting eaten away. So, people maybe should not ask the question, how aggressive am I? But an appropriate question would be, do I have enough risk for where I'm at in life right now as I approach retirement?
Yeah, I think I probably went too conservative, but it made me comfortable, so that's as a part of it as well. And so what about diversifying your portfolio too, because that's important?
It is, and a lot of people understand that in the sense of spreading your investments out over many companies or different asset allocations, but it's not always thought of in regards to the income sources you have or the tax treatment that you have with those accounts. Because market volatility is just one risk in retirement. Inflation, taxes, there's a lot we have to look out for, and we look at a portfolio like a chair. You got 4 legs on it. If one gets kicked out, not too big a deal. But if you only have 1 or 2 legs to stand on, you can get hurt real quick with that.
So we've seen a lot of ups and downs in the last 12 months. Do you like a market like that? How do you feel personally when you see all of the ebbs and flows?
You see the patterns and you understand that we will have down months and years, but that's part of the cycle of the market and our economy, and you just have to be proactive with the strategy, something that you can hang your hat on and not sweat the ups and downs so bad.
It's like the captain of a ship. You've got to remain calm in that storm. That's who I want, navigating me through a storm. All right, Micah, thank you so much. And speaking of weather, let's check in now with our meteorologist.